Okay, something really big is happening in the world of precious metals. After years of kind of quiet movement, prices are just exploding. And one metal in particular is right at the center of the storm, and that's silver. So let's just get right into it. In mid-October of 2025, silver didn't just climb, it completely surged, blowing right past that critical $50 per ounce mark. Now, that's not just a number, folks. It's a historic price peak that has sent some serious shockwaves through the financial world. So naturally, this brings up a couple of massive questions. First, why is this happening right now? And maybe more importantly, what does all this frenzy over a simple metal actually mean for the markets and for you? To really get a handle on this silver surge, you have to understand that it's not just one thing causing it. Not at all. It's more like a perfect storm, where you have industrial demand, investor anxiety, and a shrinking supply all hitting at the exact same time. You know, this story didn't just start yesterday. The pressure has been building for years. It really kicked off with this quiet draining of London's silver stockpiles way back in mid-2021. Then, bam, you get record industrial consumption in 2024, which was followed by a massive price jump. By the time we hit October 2025, the stage was basically set for the explosive move we just saw. All right, so to truly understand what's going on with silver, we've got to look past all the investment hype for a second and see its fundamental role. Because this isn't just about money, it's about the literal building blocks of our modern world. And here's where we really need to understand the difference between gold and silver. Gold, well, that's your classic safe haven. It's where money goes to hide when things get scary. But silver is different. It's a hybrid. It's part investment, for sure, but it's also a critical industrial commodity. And that dual role is what makes it so much more volatile and so central to this story. So where is all this industrial demand even coming from? Well, it's coming from the biggest technological revolutions of our time. Think about it. Every single solar panel, every electric vehicle, those huge 5G networks, and countless electronics, they all rely on the unique conductive properties of physical silver. And just to give you a sense of the scale here, in 2024, the solar industry alone ate up almost 200 million ounces of silver. That one sector is a huge reason we're in a 5-year supply deficit, where the world is simply using more silver than we can pull out of the ground. So on one side, you've got this massive industrial demand. But now let's add the other piece of the puzzle: fear, a little bit of market frenzy, and a rapidly dwindling supply for investors. You know, none of this is happening in a vacuum. The backdrop to all of this is a really deep sense of economic unease. Investors are looking at rising government debt, the potential for major currencies to lose value, ongoing geopolitical tensions, and they're running to what they see as the safety of tangible assets. And this is why you're starting to hear this term thrown around, short squeeze. So what is that? Well, in simple terms, a short squeeze is what happens when demand massively outstrips the available supply. It causes prices to just skyrocket as everyone scrambles to get their hands on the asset. And check this out. This chart shows the free float. That's the actual physical silver available for trading in the London market. It has plunged by a staggering 75% since 2019. The physical supply that underpins the entire global market is just vanishing. And look, this sentiment isn't just on Wall Street. As one retail investor on Reddit put it pretty bluntly, the price spikes are just silver and gold saying your fiat is, well, in trouble. It's a really raw look at the psychology that's driving this whole rally. Okay, so with all this chaos as the backdrop, how are people actually navigating this silver market? Let's take a look at the options, from the big corporations all the way down to individual investors. For some companies, all this volatility, it's great for business. Take a company like Triple Flag. Now, they don't actually operate mines. Instead, their whole model is providing financing to miners in exchange for a percentage of whatever that mine produces in the future. It's called a stream or a royalty. And you can see right here just how big a deal this is for them. In 2024, a full 36% of their revenue came directly from silver. So when silver prices soar, their bottom line soars right along with it. And they don't even have to dig a single ounce out of the ground themselves. Now, for you, the individual investor, the choice is a bit more complicated. It's kind of a dilemma. Do you buy physical silver, actual coins and bars you can hold? That gives you tangible security, and it can trade at a high premium during a shortage. Or Do you go for the convenience of an ETF, an exchange-traded fund? It's easy to buy and sell, but it just tracks the price. You can't actually get the metal delivered, and you miss out on those physical premiums. It's really that classic trade-off between security and convenience. But okay, we have to pump the brakes for a second. With all this excitement, there is a very powerful and skeptical counterargument that we absolutely need to explore. Is this historic rally really built on solid ground, or is it just a speculative bubble that's waiting to pop? Financial commentator Dave Ramsey puts the skeptical case pretty bluntly. He argues that unlike a company that actually produces value, a commodity like silver or gold has no intrinsic driver. Its price is moved by nothing more than the raw emotions of fear and greed. And the argument against them really breaks down like this. First, the US dollar hasn't been tied to gold since 1971, so that historical link is broken. Second, as Ramsey says, their value is emotional, not based on fundamentals. Third, if you look at their long-term returns, they often lag way behind investments like stock mutual funds. And finally, this whole idea of using them to buy things in a crisis, well, it's just not very practical. Ramsey really drives this last point home, stating that doomsday scenario of, trading gold for bread, it just doesn't happen in the modern world. It's more of a historical fantasy, not a practical financial plan. So at the end of the day, we're left with these two completely opposing views. Is silver a smart hedge against real-world shortages and very real economic uncertainty? Or is this $50 price point just the peak of a huge speculative bubble that's been fueled by fear? This whole thing forces us to ask a much, much deeper question. As our money, our assets, and even our identities become more and more digital and abstract, what is the real enduring value of something physical, something you can actually hold in your hand? The answer to that question, well, it might be the key to understanding not just this silver surge, but the future of value itself.